Hi, this is Mohan Kumar from Brainables, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 10th, 2023, and see what kind of entry and exit signals the strategy has generated. Let's have a look at the charts. Perfect. You're looking at the two view chart in the Trading View platform. So we have the Nifty spot on the left and the Nifty futures on the right, and both these charts are set to a 3 minute time frame. And the three indicators, the custom indicators which I've built to be used on this chart exclusively on the Nifty 3 minute charts, right, are placed on both of these charts, right, and they are just hidden. So before I turn these indicators on, let's look at the price action for today. So the price kind of opened higher, right? As you could see, there was a slight gap open from yesterday's closing to today's open, and post open, the price swiftly reversed, and it actually went below the previous day's closing, right? And then at this point, the price immediately reversed. There was a sharp reversal, and the trend continued post a small dip, right? And it was kind of like moving higher, right? And there was a bit of a consolidation at this point, and the price sharply corrected. It even went past the previous low point, and it actually moved to almost to the low point that was made in the morning, right? And then the price swiftly moved, and then it actually dipped and it moved. So it was quite a volatile day, as you could see, right? And as a day trader, you could have capitalized on, if not all, some of the moves, and you could have made some good profits. So now let's turn these indicators on and look at the same price action with those indicators applied and see where exactly the indicators triggered an entry and an exit, right, and how many trades we could have taken with these indicators on. All right, so let me bring these indicators on. These three indicators is the basis for the triple threat strategy. So why it's called triple threat is because these three indicators give us three conditions to enter and three conditions to exit any trade, right? So the first indicator is the price levels or the locations. The second indicator is the market participants. And the third indicator is the trend, right? So these three indicators, in conjunction to the price action patterns and candlestick patterns, we actually execute trades. And now looking at the chart, you could see the price opened way above the central pivot range. The moving averages are kind of flat. It's neither sloping downwards or it's neither raising higher. It's kind of flat. And you could see there was a sharp fall, you know, which even broke the central pivot range, which is considered to be as a major location or a level. So there was a sharp fall post the open, and it was like a parabolic move into the previous day's low, as indicated by the black line, as you could see. And this was a parabolic move. It did not actually show any kind of pause while it moved almost down, and then it actually retraced quite a bit to the green moving average, and then it actually moved very close to the previous low, and it even went further to the daily support, as you could see. And you could see a lot of participants entered the market right at this place. You could see there's a lot of pin candle with the participation, right? You could see a pin candle right here. There's another green pin candle right here. So there's a pin candle right here. So it's a very good spot. Look at the trend meter. The price actually moved from here to here, right? It's a sharp move, but look at the trend meter here. It barely showed any kind of move towards the green zone right here. This clearly indicates that the trend to the downside has weakened, has lost its momentum. And on this particular chart, it has actually shown that the trend has moved into the green zone. So it's a beautiful setup. So you get to enter into a trade right above this candle, the pin candle, and right below this pin candle is going to be the stop loss. So your risk is always limited to one candle, and you would be into the trade as long as the price, gets some stiff resistance at a major location. So as you can see, the price swiftly moved into all the moving averages, and this being one of the major moving average, the black moving average, which also is the black dotted line right here is the previous day's close. That's one of the major locations. With this, there's a confluence, and with the participation right here, as you can see, this is the place where exactly you would take your target. Uh, right, so that's your target. You take your profits here, and if you could see, it's a wonderful trade. It's a long position that we've taken. Right now, this exactly is where we entered. Now this is going to be your stop loss, and this is going to be your right. This is going to be your profit. So it's roughly about 10 to 1 is to 5. As you can see, 10 points is the stop, 50 points is the target. It's a wonderful trade altogether. So let me remove this particular risk to reward. Okay, so that was our first trade for the day, and just look at this. The trend meter hasn't. Just give me a second here. The trend meter actually hasn't moved into the red zone yet. There could be a follow through move. So you wait patiently because you don't get to enter into a trade right here because now the price is into all these moving averages, right? Even though it is at a location, look at the trend meter. It's not done yet. So this was a sharp move. So there could be a follow through move. So the price swiftly moved back here, right? Again, it moved way past below all the moving averages, right? So you patiently wait to look at the price action because there was not much of a participation that has come in here for you to consider entering into this follow through trade. So when the price actually goes back into the moving average, then retraces back again to the previous low point, right at this level. As you can see, there's a pin candle right here. This exactly is the place where you would make a re-entry. So this is going to be an entry. This is going to be a stop loss. It's a follow-through trade, and you stick to the trade as long as the price reaches your target, which is going to be the central pivot range. So that exactly what happened. So you get to take this beautiful trade again. So if you look at the risk to reward, it's unbelievably, good. uh, Two back-to-back trades. Again, it's a long position right here. So this is going to be your entry, and there's going to be a stop loss. So it's a 12 to 13 point stop loss, right? And your target is going to be 45 points. So it's roughly about 1 is to 4, right? It's close to 1 is to 3, 1 is to 4. This is a follow through trade, but still you were able to get 1 is to 3, on this particular trade as well. So two back to back trades, such a beautiful, price action behavior as dictated by, the signals in conjunction to the price action and the candlestick pattern. We took two beautiful trades, right? And the price is almost back to the point where there was a huge sell off in the morning, right? Exactly right here. But you don't get to enter into a short position because the price is way above all the moving averages. It is even above the central pivot range. So the price could get a strong support at either of these three moving averages. As you could see, the price moved into the moving average. It found a strong support, and it's moving back again to the same high point right here. And look at the trend meter. It is into the red zone, right? As the price was consolidating and moving higher, the trend meter clearly indicates that it is moving low, right? So this price trend conflict, it's a clear indication, right? As you can see here, the price even moved higher, right? And this pin candle right here, and this candle, which is exactly the same spot as this pin candle, it has not even made the high of the previous high point. It is still lower, but there's a lot of participants as indicated by the blue and the green dot. So that's your bet. That's going to be your entry candle. So this particular candle is going to be an entry. So I'm going to bring this right, and this is going to be a stop loss, which is right above this particular candle, right? And your profit is going to be as long you stick to the trade as long as the trend meter gets into the green zone, right, or any major location. So as you could see, 10 points was the stop and 47 points was your target. It's close to 1 is to 5. Again, a wonderful trade, a quick trade, right? And you could see that now it is roughly about less than 30 minutes you were able to capture this particular move. It is quite accurately signaled by the indicators, right? With the participation, with the location being correct, with the trend meter signaling that it's the trend to the upside has lost its momentum. So we took this beautiful trade to the downside, and it exactly halted at the low point in the morning. This exactly is the place where the follow through trade happened. And with these two candles right here, this exactly is the spot where you could see a lot of participants coming in. There's a volume candle coming in. So this is your third setup. It's a double bottom setup. So you could very easily make an entry right here. Double bottom, double top is one of the five price action setups or entry setups that I discussed in the webinar, right? So the double bottom is a very strong reversal pattern, and as it indicated with a participation with a major location acting as a support, which is the previous day low, the price turning from this particular point is a wonderful place for you to enter into a trade, and you stick to this trade as long as the trend meter gets into the red zone or the price gets into a major location and seeing a stiff resistance with a lot of participation. So again, I'm going to clear these drawings and bring the risk to reward. It's a long position right here. I'm going to bring this risk to reward. So this is going to be an entry, this green candle right here, and the risk is going to be below this candle, and the reward is going to be here, right here. As you can see, a lot of participants, and the price is at the previous high point. So again, it's a 14-point stop loss, and the target is going to be 50, which is easily 1:3, right? 14, 1:3, 1:4. So it's a beautiful setup again. So four trades for the day, as you could see, right? So the first trade was this. The second trade was this follow through trade, trend continuation, right? The third trade was this, a quick reversal, and then a double bottom reversal right here. So four trades, all beautiful trades. The average reward was 1:4, right? And it's a wonderful day. So we have capitalized on most of the moves. Just that we did not capture this move because it is towards the end of the day. Now it's like cat on a wall. It could jump either sides. So we do not usually take chances beyond 245. Else, as indicated by the price action, it swiftly moved higher. It retraced back into the moving average. And looking at the price action, looking at the trend meter, you could have actually taken a low probability, but usually 245 is like I close my system and I leave for the day because I do not want to actually sit and get tempted, right? Looking at the chart. So barring this last move, it's four beautiful trades, and that's exactly how we capitalize. We take advantage of the price action candlestick pattern along with these three indicators. So this is what is called the triple threat strategy. The accuracy is amazingly good. I've never seen this particular strategy giving false signals because it is not just the technicals, it is the price action, it is the candlestick pattern, right? It's an amalgamation of a lot of factors based on which we take these trades. Hence, the accuracy is mind-blowingly true. So if you would like to know more about this particular strategy, I've created a beautiful course. It's called the Triple Threat Intraday Strategy course, right? It's an end-to-end course targeting beginners and experienced traders. It's a private one-to-one session. The reason why it is private is I can tailor the content based on your experience in the stock market, right? And the topic covers, it's actually, keeping the strategy in perspective. The topics, like, it covers the price action patterns, the candlestick patterns, the five price action setup, with based on the price action pattern and the indicators, right? And then you also get to know about the charting platform. How do you create charts? How do you place these indicators, right? And you also get to know about what kind of orders you use. You get to know about the options, the open interest analysis, a lot more details, just to get you started with this particular strategy. So this course covers enough information, for you to actually start your trading business and uh, become profitable and trade like a professional in a month's time. You also get all these indicators absolutely free with lifetime access. Otherwise, it is not available out of the box. So I have to give you access to these indicators, right? So it's going to be absolutely free with this course. And you also get to have 90 days worth of charts, the intraday charts on a 3 minute time frame, exactly what you saw in this particular video. So 90 charts with clear entries and exits marked, and with all these video recordings, the Nifty chart analysis video recordings, right? You will be having the confidence to become an independent trader. And you also get a 30 days support post the webinar. So to clarify any doubts and to get your questions answered, so you can become a professional trader in no time. So please drop a message to my WhatsApp and to my email ID, right, to get to know more about the details. I've also made a couple of videos about what the course covers, like the topics and what this course is all about, right? Why you need to consider taking this course. So please do visit those videos. I will provide the link. You could see the link on this particular screen. So that's it for now. So until I get back to you with another video on the Nifty chart analysis, it's bye from me, and take care of you and your loved ones. Bye bye.